Hello everyone, welcome to Just Invest Today. And man, we have a lot to talk about in this video, man. So Alibaba just came out with the Q3 earnings, man. So we're gonna do a quick stock analysis on Alibaba. And I just want to share my thoughts and what I'm seeing because I got some good news and some bad news for this company. So I want to hear your thoughts about this. Tell me what you're thinking about Alibaba. How did they perform? What are you seeing? Because I'm going to give you what I'm seeing, but I want to hear from you guys to tell me how are you looking at Alibaba when it just released its quarter results. Let's look at the overall picture of Alibaba first, and then we can get to the stock price later and what it's been doing. So before we really get into this, guys, can you please like this video, subscribe to my channel. I'm always providing you with so much new content, man. So please like and subscribe now. Click that subscribe button. Alibaba right now, if you were to think of it like a business, just say you were trying to buy all of Alibaba right now, you would pay $300 billion for Alibaba's business, right? So just think of it like that. But now let's look at how much cash the business is generating. Cash from operations. The last 12 months, $30 billion it generated, right? But think about it like this. Just think about it very quickly. If we bought Alibaba's business for $300 billion, Tmall and Taobao are the main aspects of Alibaba, and that's how they really generate their cash. That's the cash generation portion of Alibaba, basically. So when you think of it like that, if we bought the business, we would get $30 billion. So if we put like a multiple, say we bought it for $300 billion, and in 10 years, think about it, in 10 years, you would get all our money back. The business would pay for itself in 10 years because we put a 10 times multiple on that. So 30 times 10, around 300 billion, right? So if we bought Alibaba's business right now, we can get the business in 10 years. The business would be fully paid off in 10 years. And when you think about it like that, it's crazy because then you have Ant Group, you have all the Alibaba investments, we have Cloud, we have Lazada, we have Trendable, we have so many other aspects of Baba that's kind of losing money right now. They're not generating money because they're just pouring money back into that business. And they're saying that the profits of that business will come, but it has to be waiting. It's getting lessened. So we're basically getting those businesses for free if you think about it in that sense. So that just goes to show you how cheap Alibaba is as a business right now. So now let's get into the earnings call. When you get to Alibaba's guidance, they actually beat on earnings and actually missed on revenue. So right here we have $2.67, a beat of 13 cents. Revenue 38 billion, so almost like a 12% year-over-year increase, but it still missed by $500 million. So now let's focus on what happened because the share price dropped like 8% and then it recovered. Now we're gonna get into the earnings call and let's see what Daniel said about the business. I highlighted the most important things to me and what I'm seeing for the future of Alibaba. Comment down below, tell me what you're thinking and how are you thinking about what Daniel said about Alibaba and the business. He remained focused on building long-term capabilities centered around customer value creation. Despite the resurgence of the flu, China's market economy slowdown and increasing competition. So do you think the whole Chinese economy is going to turn? Because they keep saying that the whole Chinese market is just on the low right now because of the whole flu situation. And you have to remember that. We are hoping that turns because remember, in China, there's like a zero flu policy. Like there's zero, they don't want nothing. So everyone's still like not able, they're still kind of holding money, not really buying stuff. They're not going out. So is that having a big effect on the economy? And Alibaba is saying it is. And a lot of other Chinese companies are saying, yes, this is having an economic slowdown. And they're only seeing like 2-3% growth in the economy. So how are things going to turn out once this basically ramps back up? So they're saying this is affecting it. They're also saying increasing competition. So is competition really killing Alibaba? And you really got to get down to that, because it's Tencent, PDD, JD.com, like all these businesses that are using e-commerce platforms and using the video platforms to sell products. Like, are those businesses just far in between better than Alibaba right now? I really don't think so. I think it's just a hinge on Alibaba and what they're doing, but I don't think this is having such an effect as how they're saying it and how they're portraying it. In my opinion, I think there's something deeper, and I'm going to kind of get into it, right? So in the fourth quarter of 2021, China's GDP grew 4%. So yes, we're seeing a decline in the GDP of China, which is usually way higher than that. We are hoping this kind of turns around. We want this economy in China to turn around, and that's why we can sit pat for 2 to 3 years. You have to remember what I just said in the previous part. I just said that you can buy this business for $300 billion and you'll get all your money back in 10 years. And that's presuming no growth going forward. That's no growth. That is just them generating 30 billion year after year of free cash flow with no growth. So how reasonable is that really? Not reasonable at all. And that's the price you're paying for the business right now, right? So that's how I'm seeing that's gonna turn eventually. Maybe mid-year, maybe next year, maybe the year after. Who knows, when the whole flu and their lockdowns and all that stuff gets back in order. Because remember, it's China right now we're talking about. At the quarter end, our annual active consumers reached 1.2 billion globally, representing a quarterly net adds of 43 million. So they're still growing. And this has to do more with Taobao deals, man. In China, our AAC grew from 953 million to 979 million during the quarter, while AAC outside of China grew from 285 million to 301 million. So, guys, their annual customers are still growing. And that's what we want to kind of see with Alibaba. But then we have articles like this. We have articles like this saying that China has a bigger problem, or Alibaba has a bigger problem. There are no customers left. And this is kind of true. But we're going to get into what they're actually planning to do, because they're getting so big. It's going to be hard for them to grow more in China. And that's why they're becoming reliant on more Taobao deals, getting into those lower tier cities. But in their actually earning presentation, they're going to focus more on actually not just growing the customers, but actually growing revenue per customer. And that's what they said in the earnings report, that they're going to actually focus on more going forward. Maybe not this year, because they still want to grow their business. So they're not settling down for just trying to squeeze the customers, right? They're trying to provide value. They're not trying to squeeze the customers for all those fees right now, as they think there's still a huge runway for growth. So that's how Alibaba is looking at the business. They can squeeze money right now, but what is that going to do for the long-term value creation? People are going to leave because you're squeezing fees right now. So the more value you provide, the more customers want to stay, and then later on you can squeeze more value from the customers by taking more fees. So that's Alibaba's plan, in my opinion. Tell me if I'm wrong, and that's why we have to have a longer view. If you only say Alibaba doubles from here, like, that is not unrealistic. In 5 years, if Alibaba doubles, you're still earning 15%. 15% in the stock market is still amazing. Who thinks that Alibaba can't double in 5 years? Like, that is not unrealistic, and you're getting 15%, right? So that's still an amazing return if you really think about that, right? Over the past year, we invested heavily in Taobao deals and Tao Kai Kai. I probably said that wrong. We do not view these two businesses as standalone units, but integral parts of our China commerce business metrics. Paid orders during the quarter grew over 100% year over year in Taobao deals. 100% year over year. And remember, Taobao deals is trying to get those lower tier cities and kind of get more community buying, community marketplace from these two fractions of their business. So they see huge optionality in these two fields, and they're still growing that. So they're focused on spending in those two businesses right now. But they're saying that later on, basically capital expenditures in those businesses, and the profit is going to start generating more eventually. But they're not focused really highly on that now. They're saying so much value creation in that aspect that they're still investing in it. Let's shift our focus towards quality growth through optimizing efficiency. So remember, that means their expenses are going to go down as they build more scale. We expect to gradually narrow the operating losses in these two businesses in the next few quarters. The next few quarters. This is next few quarters. This is not even talking about years out or 2 years out. The next few quarters, they're saying that they're going to reduce expenses, and that's still growing as that business still generates revenue. So who knows when we can kind of see net income from that, right? So that's an amazing prospect going forward. Overall order growth continued to maintain healthy momentum at 25% year over year, with Lazada and Trendable growing 52% and 49% respectively. And this is the optionality that I'm talking about. People are giving no credit for the international businesses right now. They don't even care about them and how strong Lazada is growing, how strong Trendable is growing. 52% and 49% respectively. That is amazing. And look what Alibaba is kind of trending to do, because they're trying to create value right now. People are not understanding how much value Alibaba has. So, because even Daniel is saying, what? The market is not pricing Alibaba fairly right now. So they have so many options to take out that value out of the business. So this is one way they're going about it. Alibaba halts talks to raise $1 billion before Lazada IPO. This quarter, Ali Cloud continued to invest in expanding its international infrastructure. We added 2 data centers in the Asia Pacific, one in Korea, one in Thailand. Ali Cloud now provides cloud computing services in 25 regions globally. Our cloud revenue grew 20% year over year. This quarter, we saw very strong growth in demand from financial services and telecom sectors, which partially offset slowing demand from some customers in the internet sector. China's cloud market will be RMB 1 trillion opportunity by 2025 in an industrial digitalization today and still in the very early stages. So this is amazing, and this is how people are not valuing Ali Cloud, man. And they're seeing huge success in this business, growing 20%. And it would have been 30 if I think TikTok didn't leave their Ali Cloud business. But who cares, because they're seeing growth in other sectors, and that means that they can actually diversify their customer base more. So cloud is still growing. This is where kind of people are iffy about. It's only 10% year over year growth. Our top 3 revenue growth contributing segments were China Commerce, Cloud, International Commerce, which grew 7%, 20%, and 18% year over year, respectively. While our China Commerce statement may be impacted by slower macro and increased competition. So here's kind of the bad news. How much is the macro affecting Alibaba? Is it more than the competition? Because if the macro is affecting Alibaba more than the competition, that's a good thing, because the macro environment is going to turn. It won't always be like that. But if the competition is just outdoing Alibaba, it's just killing it, then that's a bad sign, right? That is looking bad for Alibaba. But how much factor are we putting into the competition? Are they just far and above Alibaba? Or is just that people have more optionality? They can go to Alibaba, JD.com, PDD now. So how much of it is competition and macro? That's kind of the key answer that we need to unfold. And I still think Alibaba's growing their customers like crazy. They're still providing a lot of value. I think JD.com, Alibaba, PDD, they can all succeed too, right? It doesn't have to be one or the other. In my mind, it doesn't have to be the one or the other. I think 2 or 3 businesses can succeed and can grow in the Chinese economy, as the Chinese economy is about to be one of the biggest economies in the world. Like 10, 15 years, it's going to be past US if it's not already, right? According to GDP, right? So I think more than one company can grow, and Alibaba is doing way more internationally than both of those companies. So I feel like they still have a lot of triggers to pull in this kind of aspect. So what do you think? Is it more competition killing Alibaba, or is it more that macro, the whole flu, the epidemic, the pandemic, whatever? What do you think is like having more impact on Alibaba right now? That's kind of key questions to answer. So this isn't key. This is why I highlighted this section really importantly, because like Let's read this. Additionally, we have increased the merchant support through incentives to drive merchant adoption of new value-added services, as well as strategic reductions in selected services fees to lower merchants' operational expenses in a slowing consumption environment. So this is the big news, and this goes back to customer management revenue. They are providing more value-added services to these businesses, and they're strategically reducing that for their customers and people who trying to function and trying to run businesses on these platforms. They're reducing the spend and they're lowering the fees, and they're not generating as much revenue on purpose. They're reducing that because we believe this is near-term spending builds goodwill with our customers and supports sustainable long-term growth for our China commerce business. So they're reducing their fees, they're reducing all of that to see customers get more on Alibaba, to actually use Alibaba more. So is this a strategic move, saying that Alibaba is doing this because they want to grow their customer base, but while they're doing that, they're going to eventually increase that so they can kind of generate more revenue? Or are you seeing that they're doing that because competition in other places are reducing that fee as well, like PDD, so they need to do that to compete? So if they don't do that, then Alibaba's business goes into the dumpster. So which way do you see it? I think it's the opposite way. They're creating more value for the people using their apps, but eventually they're going to start raising that, squeezing more fees from from people using their products, in my opinion, right? So what do you think about that? That's what I'm thinking about this, is that they're creating more value right now, and in the long run, they're going to start actually increasing their fees slowly as they add more value to the people using their products, people using their business services. So tell me what you think about that. Last but not least, look what Alibaba is doing. We continue to focus on adding value to shareholders through share repurchases. And this is going to be huge because they're seeing the freaking CEO is telling you that their stock price is super undervalued right now. So they're going to continue buying back shares. What if they start actually buying back so many shares that it just produces so much value to us? What if it's like 5% of the shares, then 10%, because the price keeps going down and down and down? So this is just more value for us as shareholders as they continue to reduce the share count. So that means basically we're going to be owning more of the business eventually in 5 and 10 years. We're going to continue to own more of the business because they have so much $50 or $60 billion in cash on the balance sheet, so they can continue to do this while generating cash from their operations. During the quarter, we repurchased approximately 10.1 million of our ADS for approximately 1.4 billion under our share repurchase program for 9 months ended in December 2021. Representing 51% of our 15 billion share repurchase program. Our current share price does not fairly reflect value of the company. At current price levels, we plan on continuing our share repurchases. At the same time, we will maintain a strong cash position that gives us financial flexibility for future investments. So the fact that they understand how undervalued their actual business is just shows you where management is thinking. They're trying to create value for us by thinking about IPOing Lazada, repurchasing shares, and just increasing the spend in businesses that are growing, like the international businesses. And maybe they're thinking about spinning those off. So if they span off their Turkey business, their Southeast Asian business, what is that going to do for us? So there's so much optionality here. So that's it, guys. Tell me what you think. So just to kind of sum it up, what are you thinking about Alibaba that I went through, the negatives, the positives? What are you seeing for Alibaba, man? Like this video, subscribe to my channel, and then get back to you in the next video. Peace.